Good morning, everybody. It is Jack Gleason with Startuptrading.com, 9 o'clock in the morning, April 9th, 2020. For our economic news events here today, we have OPEC meetings all day. This morning, we had the ECB monetary policy meeting accounts. At 8:30, we had the employment change for the Canadian markets, and they were double expected. The unemployment rate, 7.8%. Wow. And then we had the unemployment claims out of the U.S. markets, 600, I can't even say that number, 6,606,000 jobs lost. And we also had a Fed announcement this morning. So the Fed announcement, I don't believe that was on the schedule yesterday. However, I'm sure that they saw those numbers coming out and they needed to make a statement. Now, the Fed has basically said they are going to pump in another $2.3 trillion. I believe that was, just quickly read the headline here this morning. But yeah, another $2.3 trillion. And here it is right here. The Federal Reserve on Thursday took additional actions to provide up to $2.3 trillion to support the economy. So they're literally buying everything. We're going into a pretty crazy historical moment in the markets. Later today, actually we already had core CPI and PPI, and then Powell is going to speak at 10 a.m. Powell is probably going to be speaking as the ES is trading its full halfway back short. It's some scary stuff. And then preliminary University of Michigan consumer sentiment expected is 75. That's going to be at 10 a.m. And then we also have tonight CPI out of the Chinese markets and bank lending year over year for the Japanese market. Tomorrow's Good Friday. The markets are closed. But we do still have a couple of news events, core CPI and CPI numbers in the morning. And then we're going to have G20 meetings and a couple of FOMC members speaking. But it's official. The Fed is just going to buy absolutely everything. And that's the only reason the market's going up, because the Fed is just buying everything. So just keep that in mind. But we are also running into the full 50% retracement short here today, which is pretty interesting. The first Fed action, and it's going to be amazing if it happens again. It's going to be absolutely amazing. The first Fed action we saw was the emergency rate cut on March 3rd. The emergency rate cut is what triggered us to trade the full 50% retracement short from the 2020 high. Now we are going into the second time this setup has traded, and the full 50% retracement short is just 20 points above where we are currently trading. It is just 20 points above where we are currently trading. 27.86, 27.85.75 is most likely going to trade as Powell is talking. This is exactly what happened. I'm going to be absolutely mind blown if we hold this short and move lower. Right now, and really going into this morning, we had, if you guys remember coming out of the lows yesterday, we had a halfway back long trade. Okay. That stuck, and then we moved into extensions. Traded, and then same anchor new high broke into that, traded and then broke into the meeting. So the only thing that I have for a long sequence right now, Sunday night after we gapped up in the S&P 500, we did begin extensions from 25.20 to high. They traded here. They traded here on Monday. Same anchor new high is what has held. That upside target is 28.04 quarter. I am taking Wednesday's low to the most recent high and using it as our bullish above line in the sand. Now we are going to be running into the largest halfway back setup I've ever seen, or anybody's ever seen. Realistically, there's never been a profit target greater to the downside from point value 27.86. And we're going to have Fed Chairman Powell speaking. The Fed has basically said they're going to buy everything. And sooner or later, they're going to, that's why that is the only reason the market is up. We can't argue with what they're doing. We can't argue with price. We have to continue to follow the price action. There is this 50% retracement short, but unless we validate it by breaking our long setups, there's not going to be a trend lower. The Fed will just come in and literally buy everything, which they can do. So we need to be aware of that. We're running into the 27.85.75 right here as the market opens. We'll see what happens, but those are the setups I have here for the S&P 500. Moving on to the Dow, let's back out to the weekly chart. Draw up that full 50%. That full 50% retracement is at 23,812, also right above where we are currently trading. 23,812. We have this similar extension for the S&P. It's at Sunday night high to high. And that's not something I saw in advance. It's only after we broke out of the opposing short that I began to look at that setup. So I'm looking at Tuesday's low to high right now for the Dow. And these were aggressively front run here this morning. That leads us up into, these are our upside targets right now. And they're above the current 50% retracement short. Moving on to the NASDAQ. This NASDAQ long setup traded. The NASDAQ's getting a little bit of a deeper pullback, so the indexes aren't. These were from the levels I shared last night. Now the NASDAQ is low from Tuesday, Wednesday. Too high is what we pulled into. That upside target is 83.48. Now the full 50% retracement on the day in the NASDAQ is 81.95. 81.95. That's the full 50% retracement. Oil's been pretty choppy here. We do have OPEC meetings all day long. You're definitely going to want to be careful with that. We'll probably see, yesterday we saw a nice headline that shot the market higher. You absolutely, not that you would ever not want to have a stop in, but you absolutely want to have your stops in oil, just because of the volatility that's going to come with those OPEC meetings. We had the full 50% retracement from the 30th to high trade on last Thursday. It never completed profit targets, and we are inside of this consolidation between 28.46 is the 50% retracement short on the daily, and 23.33 is the 50% retracement long. Excuse me. Now we have technically broken out of the full 50% retracement short. So there's the possibility on a first test that we trade into this long. Now let me go to a smaller time frame. This is really choppy here. We have traded down into, and it's a very sloppy 61.8. Can't even draw this correctly. Here we are. We have traded down into and tagged that 61.8, which technically broke the long, and then we traded a short, and then we traded off the short and broke the short. So I'm looking at oil and the way this chart is acting, and I don't want to touch it. I'm just going to leave the higher time frame draws on the screen right now because it is just breaking everything. It's breaking everything, and it's going to be a headline disaster. If you want to trade it, feel free, but when there's OPEC meetings all day with broken draws on both sides, that's a market I don't touch. For our USD JPY, we have our full 50% retracement from the high of the 6th of April to what was the low of the 7th. Now, we have just been consolidating inside of this. Really, really quiet here, and surprisingly so. There is an extension to the long side at 107.37 to high. Now, the only level I'm interested in is just at this point in time, the 50% at 108.37, and then we have the 38.2 at 108.60. Oops. But the USD JPY really is in another tight consolidation, stuck between a long and a short, and we're just range bound here. There's better currencies to trade. AUD USD, in my opinion, better currency to trade right now. We have a trend. This is a setup like we have Tuesday's high to high. Okay, this is an extension to extension. Our first extension traded on Wednesday. It was the high of 160.49 to high. Okay, now that high to high is our next setup. So I'm looking at the 38% retracement, 60 to 62. Euro has finally come out of its full 50% retracement long from Monday's low to high. That level was a 108.46. We traded it once, twice, and then this morning with the announcement of the Fed, we've come into that level again. And with the Fed, we have confirmed support in both gold and silver. We were looking at full 50% retracements in gold and silver. Now, unless they broke their opposing moves, there was no way to confirm support. Now, we did consolidate sideways here. 1, 2, 3 times, 4 touches, and then the Fed, of course, comes out with that announcement. Just amazing how people know. You only see it after the fact, but there was clearly buyers on these levels knowing what's going to come out to the Fed here today. The full extension that I'm looking for the next entry, 1686.4 to high. We've traded it once. The same anchor, new high, is the setup I'm looking for. Okay, and that 38 is 17.13.6. 17.13.6. Silver confirms support as well. The support level in the silver market is halfway back long for the week. It is Monday, Sunday low, Sunday night open, low to high. That's what our lows are. So that gives silver an upside target of 16.22. Coming out of the last touch of that 50% retracement, we have had halfway backs once. We've had halfway backs twice. Here is the third time. And this one, I'm going to take this morning's low from 745 to high. That gives us the next pullback to enter into the trend at 1556. At 1556. But silver has come out, silver and gold, the precious metals have come out of their consolidations and are beginning their next leg up. And clearly, it more and more obvious that the Fed is going to do absolutely anything to keep this market going. Absolutely anything. Now the question is, because the Fed is putting so much money into the market, like unfathomable amounts of cash, how are they going to get that money out of the market to prevent hyperinflation when this is all over? Are they going to be able to do that? I don't know. I don't think so. But we'll follow price. There is a extension here in the GBP USD that was part of our shared levels and setups yesterday. There was the high from 123.19 to high. We've traded it once. Same anchor new high traded, and now we are blowing through profit targets. It's also, let me just back out here to the hourly, show you guys what we have as far as setups. There is an extension and the Great Britain Pound USD that has upside targets of 126.05. We are also, we're going to be breaking through a pretty important resistance level here today. We are sitting on the full 50% retracement short from the highs of the end of 2019. We are about to break through this bull flag. This is a daily bull flag on the Great Britain Pound USD with our first target at 126.05. We could run all the way up as high as like 128. This is a big breakout here in the GBP USD. So something to pay very close attention to. The most aggressive buying setup I would have would be from Tuesday's high to high. That is the most aggressive long setup, Tuesday's high to high. And that gives us this 124.37, 38% retracement. And then the USD CAD, guys, also remember we have the USD CAD news. These are all dollar weakness trades, as the Fed is clearly just throwing the dollar out the window. We have big downside targets. So I'm going to get rid of this long setup. We are clearly going to break down through it now. We have the halfway back in the USD CAD with a downside target of 137.43. So with today, we have some huge developments coming into play. We have the full halfway back short for the year in the indexes coming into play. We have trend reversals and continuations. We have a massive GBP USD breakout to the long side, breaking through the halfway back short for the year in a bull flag, in a daily bull flag. We have the USD CAD in a bear flag, breaking through the lows, heading towards its daily target. We have the fundamental news event, right? That the Fed, that news event, that new information that's going to move everything. That's a huge announcement, and I mean they're absolutely on the path of endless buying. They will not stop buying whatever they want to buy. It's amazing. I'm flabbergasted by this, but this is just what the path they've created. So if we trade, I think one of the most important developments we're going to see here today is if we trade these full 50% retracement shorts here in the Dow, here in the S&P 500, and we start breaking our long setups, we're going to be in a very dangerous place. So trade price, trade the trends. These are the trends that I have up in our development. I actually think the currencies and metals are easier trades than the indexes personally. So if you only focus on the indexes and have thought about focusing the currencies, I think today is one of the good days to do that with the GBP USD and USD CAD breakouts. You have this massive breakout in all of these currencies getting stronger against the dollar, which they've been really weak against the dollar. And now that trend is reversing. So anyways, everybody trade safe. Have a wonderful 3-day weekend. The market and room will be closed tomorrow. So take care, guys.